Welcome to this explainer. Today, we're going to break down a really fascinating truth about the financial markets. We're looking at why trading success actually relies almost entirely on behavioral psychology and strictly sticking to a system rather than just having raw market analysis skills. It's incredibly easy to just get completely lost in this sea of technical indicators, moving averages, and non-stop news feeds. But we're going to explore exactly why staring at charts all day literally won't save you if your mindset isn't heavily fortified from the ground up.
Now, trading can be totally chaotic. So let's start with a clear, calming roadmap of the 5 crucial steps we'll be covering. We're going to look at the retail trading reality, emotional traps and biases, the 4-point trade book, managing risk and drawdowns, and finally, sustaining peak trading performance.
All right, let's dive right into Section 1, the retail trading reality, mastering yourself. We really have to ask this difficult question up front. Why do 70% of retail clients lose money when trading? It's a staggering statistic, right? Why do the vast majority of everyday traders blow up their accounts even when they have access to endless technical data, high-speed news feeds, and professional-grade charting software? What is that missing link that separates the 30% who survive from the 70% who just crash and burn?
Well, the answer lies right here in behavioral finance. This is such a cool field. It combines psychology and finance to explain why we human beings act so irrationally, even when we have all the right information sitting right in front of us. Studies consistently show that psychological factors, things like your emotional control, your personal discipline, and your risk tolerance, are actually far more critical than your technical knowledge. Think of it kind of like being an elite athlete, right? Knowing the playbook means absolutely nothing if you just freeze up under the stadium lights. You can know exactly what a stock is doing, but if you can't control your own mind, you're going to lose.
And this visual really captures what happens when you trade without a strict system. The emotional toll is just immense. The sheer frustration and the stress of unpredictable price action inevitably lead to impulsive actions. When you're just reacting to red and green numbers flashing on a screen without an anchor, without a framework, you are eventually going to panic. You'll take totally unnecessary risks and suffer devastating losses that honestly could have been easily avoided.
Which brings us to Section 2, emotional traps and biases, the mindset hurdle.
So, psychologist Carol Dweck's research on fixed versus growth mindsets applies directly to how we trade. A fixed mindset tells you, man, I'm just not good at this, whenever you take a hit. And that just leads to a massive downward spiral of confidence. But a professional trader, they operate on a growth mindset. To survive long-term, you absolutely must actively reframe your failures. A red day isn't a permanent lack of skill, no. It's simply a cost of doing business. It's highly valuable learning data that you use to sharpen your edge.
Because if you don't make that crucial mindset shift, you fall victim to these primal emotional triggers. You face the fear of missing out, raw greed, overconfidence, and honestly, the absolute worst one, revenge trading. When you take a sudden loss, your lizard brain literally senses a physical threat. It forces you into this irrational survival mode reaction where you try to win the money back immediately. You abandon all logic, you abandon your strategy, and that just fuels more impulsive decisions and even bigger, catastrophic losses.
Okay, so what's the solution here? Let's move to Section 3, the 4-point trade book, anchoring your process. This is how we build your ultimate defense system.
This concept right here fundamentally changes the game. Your priority is not to make money or be positive for the day. Your priority is to set the variables and trade according to these variables to see if the plan works. When you sit down at your screen, your focus should be entirely on executing your process, not obsessing over your daily profit and loss. You are there to be a disciplined operator executing a pre-planned strategy, period.
And the absolute crux of this is implementing a structured 4-point trade book framework. This is how you methodically filter out the market noise. First up, selection, narrowing down the universe of thousands of stocks to just the ones that meet your very specific volatility and volume criteria. Next, identification, pinpointing exactly what your specific setup looks like. Then, execution, defining your exact entry, stop loss, and profit targets before you ever even click a button. This completely removes hesitation when real money is on the line. And finally, consideration, acting like a scientist to objectively review the data and improve. If a potential trade doesn't check all 4 boxes, you literally just sit on your hands and wait. Here is what a highly specific trade book actually looks like in the real world, specifically for a 1-minute opening range breakout. Notice how incredibly detailed these conditions are. It tells the trader exactly when to go long, exactly when to go short, and most importantly, when to just avoid the trade entirely. By having this logic fully built out in advance, the trader isn't guessing in the heat of the moment. They are just calmly executing a pre-approved business plan.
All right, moving on to Section 4, managing risk and drawdowns, surviving the market. Because look, even with the flawless trade book, losing streaks are mathematically inevitable. To survive those nasty losing streaks, you have to understand the expectancy formula. What this math brilliantly proves is that you literally do not need to win every time to be successful. In fact, you can have a 40% win rate, meaning you are wrong way more often than you are right, and still be consistently, massively profitable over the course of a year. The secret? Your average win just has to be significantly larger than your average loss. It's a game of math, not a game of perfection.
But here's the catch. That math only works if you enforce strict circuit breakers in your high-stakes environment. You need hard, unbreakable rules. A maximum daily drawdown, like automatically stopping if you lose 3% of your account. A maximum weekly drawdown that forces you to drastically reduce your position size until you get your edge back. You need mandatory timeouts after consecutive losses just to cool off. These rules literally rip you away from the screen before a normal, expected mathematical drawdown turns into a catastrophic, account-blowing tilt. And the absolute best way to actually enforce those circuit breakers is by physically drafting non-negotiable if-then checklists and slapping them right next to your monitor. For example, if I lose 3 trades in a row, then I close my trading platform and walk away for the day. During a stressful drawdown, your brain just isn't rational. Written rules completely eliminate the need for willpower in the heat of the moment.
Let's tie this whole thing together in Section 5, sustaining peak trading performance, systems and habits.
Look at this timeline. A disciplined, profitable trader's day is highly structured. They don't just sit there staring blankly at charts for 10 exhausting hours. They operate in focused, time-boxed windows. 30 minutes of pre-market prep when things are calm, a strict 2 to 4 hour active session to execute trades when volume is at its peak, a quick mid-session emotional check-in to gauge their mental state, and finally, 20 minutes of post-market journaling. Limiting your screen time prevents that massive psychological drain of market noise, and it keeps you from taking low-quality, impulsive trades just out of sheer boredom.
So to conclude this explainer, I really want to leave you with a provocative question. What is your true purpose for engaging with the markets? Are you just doing it for the thrill of the gamble, or are you trying to build a structured, predictable business? Because unless you clearly define your purpose and build strict daily systems, like that 4-point trade book we just broke down, to protect that purpose, the market is always going to find a way to exploit your emotions. Thank you so much for joining me today, and definitely make sure to take these frameworks to heart before your very next session.